All right, I'm gonna just go through some tickers. Something I do pretty much every weekend. I will go through and kind of draw these boxes for the areas that I'm interested in, and draw out some price levels, make some boxes, and set some alerts as well. I probably won't take the time to set the alerts right now. I'll probably go back and do that like tomorrow or something. Of course, it doesn't take very long. Literally, just like right click and set them. But nonetheless, uh, I figured I would just kind of do this live and upload it instead of just kind of quietly doing it to myself. This way, I'll probably just kind of think out loud and see what happens. All right. So you can see kind of the plots that I've had for the last several weeks here, and where I was interested. Basically, these zones are just areas that I'm interested in getting involved. I may be scalping little bits, like if it's in the middle here, like these few days and stuff like that. If I didn't have like a longer term position on. Although this day, when we got kind of this morning star, this gap up, I was very well convinced that it was going to go back down. So I was short this day. I never hold anything for very long. Usually I kind of kick myself for getting out of it too soon, but I did cover this day and then didn't. This, when it crept back up into this red box here, I remember thinking to myself that I should short it, and I did for a little bit, but I took it off super early. I only got like a couple bucks per share out of that position, which of course in hindsight I should have left it on, and I was kicking myself these days that I didn't, but it is what it is. Kind of what I aim to do is I look at this volume profile, like the shelves that we have here of high volume areas, in conjunction with areas like days of volume down here. So anytime we have like, kind of a higher volume, I'll take note of that. And then I'll look at where that candle traded in terms of its volume shelf. And then what I'll look to do is find like the highest areas of volume and on the volume profile, and kind of look at like what days those potentially were and what ranges came out of that. And it's not anything that I take too like scientifically or anything. I literally just look at it. I'm like, okay, like you had a lot of volume in here, and these few days when we had volume in that range, it sold off. So if it gets back in this range, I'll kind of look for maybe a short entry, or like down in here. Okay, we bounced here a couple times. If it gets down into this range, I'll kind of watch it, pay attention to how it's acting, and maybe look to establish a long. Of course, this day, I had a long on. I made a long on SOXL, the triple leverage semiconductors fund, and once again didn't hold this one anywhere near as long as I should have. I took it off for only a couple points in the money, and was very frustrated with myself because it would have been a very big trade for me. It would have been like if I would have held this whole time, it was. What would that be? That would have been like a 25% gain on my account in a matter of 1, 2, 3, 4, like 4 to 6 days ish. Yeah. There's no way I would have ever held it up into this, because I thought this was ridiculous. When this came back up into this range, like with all the Fed stuff going on and all, like, I thought this being up here was ridiculous. But nonetheless, so we'll go back through and set all these. I'll be looking to do the NASDAQ, the S&P 500, and then I'll go through some of the chip makers individually, only the big ones. I'm not going to go through all of them. And then I'm going to do NYFANG, the FANG microsector fund, and then also ICE-SEMI, which is the semiconductor fund. So if you don't know, the triple leveraged funds, there's one by the Bank of Montreal. It's FNGU and FNGD. Of course, FNGD is the inverse, and FNGU is the direct correlated leverage fund. And then there's SOXL and SOXS, and SOXL and SOXX are SX are based off of ICE-SEMI. I guess I'll just type it in real quick. ICE. I'm going to do it anyways, so might as well bring it up. Crazy thin back in here. And of course, these just track. Like, you cannot trade this directly. You'll notice there's no volume and there's no volume profile. Though the volume and volume profile are still on my chart, it's just they don't exist for this because it's not a tradable instrument. This is just the fund that was created and weighted for other actual ETFs and actual tradable instruments to be tracked off of. So like SOXX, SMH, some of those semiconductor ETFs, they are a direct kind of derivative of this in a way, because you can actually trade them. However, those ones are not leveraged, and I prefer to execute on the leveraged funds, which, as I said before, are SOXL and SOXS. So you can see kind of back on this day, for whatever reason, I don't know if this was like a historical level. I don't know why I made these levels down here. Oh, yeah, back in this range is why I did that. So this is the 3-year, 1-week chart. And, yeah, I guess back in here. So this one kind of broke. So I think what I'm going to do is I'm just going to go ahead and bring that down to this low, this 654 area. Actually, I'll bring it all the way down. Yeah, we'll call it good right there. So what I try to aim to do is have these somewhat akin to, in some way have them related to the ATR of the name. So like with this one, the ATR is 27.48 currently. So I would ideally not have this more than 2 or 3 ATRs, like the size of this area. So we're actually a bit wider of a range than I'd like to have, but with how volatile the market's been lately, with how high VIX is, those areas will expand. You know, when VIX is lower and it's more in a normal range, normal being somewhere between like 15 and 20, then you'll see those areas be more clear and they'll contract. They'll be a bit more reasonable. But as VIX goes up, and VIX being a volatility indicator, and if volatility as a whole goes up, those areas will kind of expand on you. I mean, obviously, the VIX and the ATR are in some ways, in a large part, they're correlated. So that kind of goes without saying, but I just wanted to point that out, that ideally I would like to have these ranges be not like, you know, 3, 4, or 5 ATRs or whatever, but they're just, the area is a bit wider. You gotta, you know, enter. What I've been doing is entering with, you know, partials, making it real small, and then if it looks like the trade's going to work, putting the pedal down at that point. Whereas I used to really like to, I'd enter in like 2 lots pretty much, you know, like if I was going to buy 1,000 shares or something, I'd buy like 600 and 400 or something like that. Whereas now I'd buy like 200, you know, watch it for a little bit, maybe 200 more, and I'd work my way up to that size over a bit longer of a period of time, generally all within the same day. I think the most I'd ever like pyramided in as far as like an elapsed time was just a couple days, but nonetheless. So yeah, so that line comes back to here. We broke that. Wonder if this week we'll end up seeing down here to the 650 area. And then if we get down in there, if we do get down there, of course, I'll be looking to most likely execute on SOXL for a bit of a bounce, see if we can get kind of a move like this, but over on this side of the chart, you know. So if we get down in this region, I think I'm going to change the color of this line so I remember later that that's kind of like halfway in between there approximately. And I'll put a little more significance. If it's bouncing around in this area, I'll be a bit more aggressive than if it's bouncing around up here in this area, if that makes sense. Just because it's lower, so the probability of a bounce is higher, and also my stop can be tighter, you know? Because if this is the point, if we break down much past here, that's the point I know I'm wrong. So since my stop's tighter, I can be a bit more aggressive on the initial purchase. Yeah, so this we got sold into pretty heavily in this area here, this big aggressive wick here. So I'm going to leave this in this area. And essentially this one would be what I'd be looking for on a bounce, you know? So let's say I do get in here. I will most likely within an ATR or two take off a portion of the position and then be looking to be completely out by the time we hit this area, because you can see there's been a lot of days traded in this area. You know, once again, these are weekly candles. So if we go back to the daily, which I prefer to look at the daily over the weekly. I like to look at both, but the daily is more significant to me because I don't even trade, you know, long enough time frame to really warrant the daily, even on a lot of cases. But yeah, so let's take a look at this. So if we do get back down in this range, ideally what I'll look to do, bounce a couple times right in here too. So I guess if it's acting properly, if the Qs are looking good, because this is pretty highly correlated to the Qs, to the NASDAQ 100. So I would consider taking an entry in here, but I'd rather be below that yellow line. But yeah, so what I'd be looking to do is, you know, enter down in this range somewhere, take a partial profit somewhere in here, and then maybe another partial in this area where we've traded through a lot of days, because the volume done in that area is significant. You know, like we found sellers in this area. We found buyers too, which is why I would aim to not be totally out of the position until up in this range. However, you know, there's been activity in that area, which is, you know, you can't just write that off. That's something to take note of. So I think that looks good for now on this one. That's really all I look to do. You know, like this one barely needed any adjustment. Some of these will need more adjustment than others. But yeah, we come back in here and see how it acts down here. Execute if it reaches the area and hope for the best. I just want to extend these a little bit here. Okay, let's go to the FANG one. NYFANG. Wow. Okay. What are we looking at here? Just kind of drawing out some levels where there's a lot. I don't really look to like get the bottom of any of these candles. I just want to see where like the most candles in that range, like a price that they traded through. Because once again, volume done in a certain area is indicative of something. You know, it's not necessarily indicative of like true value or like an intrinsic value, but it does need to be taken note of. And we're kind of right in that range right now. So I think what I'm going to do is I'll make my initial box right in here. And I'll just watch FANG next week. Although we know, Jesus, man, with the way Netflix and Amazon got beat up, Facebook did well. It's holding most of its earnings gain, which is surprising. But yeah, Amazon got beat up, Netflix got beat up. The Chinese stocks gapped up because sometimes people, I think this fund actually does add in, where's my drawing? Yeah, so this fund, like this, this index actually does track Facebook, Apple, Amazon, Netflix, Google, Microsoft, Baba, Baidu, Nvidia, and Tesla. So there's a few Chinese names within this. It's kind of a Fang plus, if you will. This is a pretty significant area here. I want that music to be that loud because that's going to get muted. YouTube will fucking wreck me for that. I want to extend this. Okay. And there's a lot of activity in this area. So what I'm also going to do is draw another little guy right here. And once again, if it bounces, then ideally bouncing up to this area will be kind of what I'm looking for. Like, I wouldn't necessarily call it a mean reversion, but kind of a retracement, you know, to that area. I never really look at Fibonacci's much, but if one were to be trading that, it'd be kind of like the Fibonacci retracement kind of idea, you know? So like, I'd pin this maybe to this last high, or would it be more logical to do this one here where it got to? And then I'd be looking for, you know, like buy down in this area, sell a portion depending on how it's acting, and then same thing, be scaling in and then scaling out as it's reaching these areas where it was previously sold. Man, 1, 2, 3, 4, 5. 5 straight weekly candles of losses. That's pretty rough. All right, let's look at this on the daily. I just want to extend this and move it this way so that it kind of continues as this chart moves the other direction. Okay, what if I just want to see how this looks. For the hell of it, let's do daily 3 year. Okay. What was this? Oh, that was COVID. That was the COVID crash. Gotcha. So, once again, yeah, hope it comes down to this area, and if we're getting some good news, if it's looking like we're going to get some of this action, you know, essentially what I'm looking to have happen is like this same thing right in here, but on the other side of the chart, you know, so like maybe watch it for a few days, and then if it's looking like it doesn't want to break this area, start pyramiding into it and look for a little bounce like this. Because even a couple days, like executing on these leverage funds, if you catch them in the right direction for even a couple days, you're looking at good percentage gains, especially on this one. This one, FNGU and FNGD commonly, like very typically move somewhere between like 7 and 12% on a given day. So if you catch it in the right direction, you can get 2 to like 5 days, you can get between, you know, 10 and 20, 25%. You know, they're really good. They're risky because they're very directional. You got to be able to say I'm wrong and get out. But yeah, if we see like a nice little flag, kind of a bear flag form down here, maybe we'll get a little pop back into this region here. And you can kind of see that same thing play out, you know, like comes down, little pop, comes down, little pop, comes down, little pop, Same. And then you, oh, my bad. And that same thing. So now we've broke this previous point. Maybe we'll come down, hopefully come down to this red area and then chill for a little bit, make a couple days, 2-3 days of a flag, look for another little pop. What I really don't like is this, like these like V patterns. I commonly miss those because it's just too risky. Like, where do you base your risk off of? I guess you could say, I guess once it reclaims the bottom of the previous down day, you could enter there and say if it re-breaks down, then you'll just get out. That wouldn't be, that'd be like some kind of methodology, but I really like to see ideally 3 candles where I'm entering on the 3rd or 4th daily candle approximately. Okay, let's go. That's good for this one. Let's go back to the Qs. Start on the weekly. Start zoomed out, and then we'll get closer, you know. And now we have our volume profile to kind of work with. Yeah, so we lost this area. So I think our next target, our next area of real action is maybe going to be right in here. Because if we lose like 310-ish, like you see this big volume area on the volume profile, like see how much longer this area is than this one. So if we lose this, there is not very much volume in here holding this up. So if we gap down below this 310 area, I would not be surprised for it to not be like, see another thing kind of like this, where if it breaks through here, it comes back down and, you know, maybe treads in here. But if this area gets lost, I wouldn't be surprised to see it all the way down in here. Man, which is crazy because I remember trading in this period of time where for a while, that's when I first started like really scalping the Qs. It was bouncing between like if we go back to the 1 day, 1 year, and I'll actually go 1 day, 2 year. Like this area, right in here from like 280s. Yeah, all of this area here is when I first started scalping the Qs actively. Like literally, like I'd get in for like 100 or 200 shares and aim to get one handle, you know, like 25 cents to 50 cents of profit. And then I'd get out and I'd wait for another entry. And, yeah, so it's crazy that we're right back down in that area. But I mean, that's part of stage analysis is we're in stage 4. It's been a decade of, you know, running up bull market, and now the Fed policy and all these changes are taking effect. But yeah, so once again on the daily, if we lose, so this area, if we lose like right in here, I'm going to make a little box in this region because I do also want to watch this. If we lose, which we closed Friday, no one wanted to go into this weekend long. Man, the selling on Thursday and Friday was pretty nuts. Or at least on Friday towards the close. There was a little bit of a bounce Thursday. A little bit heightened volume too, but not insane volume, you know? Nothing crazy. But VIX closed at 33.4, which is pretty substantial. This song will get muted. Yeah, so if we lose, see once again this volume shelf, If we lose this, the next area has less than half of that volume, pretty much half or less. So if we lose this region right here, if we don't start getting a little bounce back into here, I would not be surprised for it to run straight down into this volume area. Okay. Kind of the same thing on SPY. I mean, of course, they're weighted so heavily towards certain companies that they're going to look pretty similar. But man, if we lose this 410 area, literally, if we lose 410, I would not be surprised to see SPY below 400. If 410 isn't defended heavily, I wouldn't be surprised to see it come down below 400. I don't really execute on SPY, so I'm not going to spend as much time on it or be as worried about it. Just because I don't ever execute on it. I'll scalp Qs, but I don't really scalp the SPY. And most of the companies I trade are a bit more correlated with the Qs anyways. Man. $404. SPY price not found. If we lose, yikes. There's no volume down here. So if we lose like that 410 area, I would definitely not be surprised to see SPY below 400. Maybe even below 390. Because there's a little bit of volume here, but I mean, compare that to all this. And these people that have been buyers and trying to get in these dips up here, if they're not out yet, at some point their stop losses are going to start getting hit, you know? And then if it sinks much lower than that, you're going to start having people that have to sell because of margin calls and such. Okay, let's go and do my beloved darling AMD, which is not looking very good. There's a lot of volume right here to defend this 80 area. So SOXL might be ripe for a bounce coming into next week, because I think there's a number of these that are looking like this. We'll do NVIDIA next and see how it looks too. But I mean, once we lost this 100 level you know, we're coming right back into that area where it's finding some support again. Because the 100 was pretty serious support there for a while. But if it doesn't defend this big volume shelf here, and we have high volume the last while. So if it doesn't defend this region, yikes, is all I can say about that. I can remove some of these higher ones from weeks ago. Save my GPU or CPU or whatever the hell from processing quite as much. And at a certain point, it gets to like, I have so much on the chart that like nothing's relevant because there's fucking price levels at every single level, pretty much. So I want to avoid that, you know. Man, I'm going to be watching these heavily on this coming week because some of them are at pretty serious points where if buyers don't step in to defend, which it doesn't seem like they're going to, there could be significantly more downside to the market overall. That's like if I put up this one, like during the day, I always watch all that top area are the top holdings of that ICE SEMI. So it's like AVGO, AMD, NVIDIA, Texas Instruments, Qualcomm, MU, ADI, Intel, AMAT, a few others there, TSM. And then down here are FANG stocks and then a couple other ones that I'm like vaguely interested in. But yeah, for the most part, the top monitor is Semiconductors. The lower monitor is FANG stocks. And that way I can see them all on like a little bit zoomed in of a time frame. Usually during the trading day, I'll have those all set to like 5-day, 15-minute charts. So I can kind of see what's going on minute by minute. Yeah, so these are not looking good. Tons of selling volume in NVIDIA here. And not a lot of volume to support this area. Any of this up here. Okay. That's enough for NVIDIA. I don't got to do too much there. Pretty much thinking the same thing I was before. You know, like if we get a bounce, maybe we'll come back into this area. Come down into here, get a bounce. MCHP. This one's holding up quite a bit better. This one looks a lot better. Wait, did I even look at NVIDIA on the daily? I should at least glance at it. Man. I wonder, yeah, maybe let's see. Maybe we'll get a little bit of a flag here. Like a little bit of a bear flag. If it gives me like a day up and down in this area, maybe I'll look for a bounce and then re-short it when it gets to this area. Obviously, everything depends on price action. God damn it. Okay. Not much to see here. I don't ever execute on this individual name. Is this one of the bigger holdings? No. Yeah, this one's pretty irrelevant. Wow. MU is a notable holding within the semiconductor fund. Not a ton to be said for it, though. Oh, I can just move this down. Set a few alerts, why not? That way it'll ding at me if it breaks through one of those. TSM. Man. This thing really broke down. This one is one that kind of made me nervous too, just because with Russia and Ukraine, that could set precedents for China going to take Taiwan. We'll see, though. I'm curious to see what happens at this year's G20. Of course, it's not until November, but I think depending on how things play out until then, over the next 6 months or better, seeing who is in favor of working with people in different countries and actually inviting them and including them in the G20 summit and all that could be very telling of who's drawing what lines in terms of teammates and such for any sort of pending war. That's way too big. Where do I want to draw that? Let's actually put it like here, and then we'll go to the top of this where it enters this volume shelf here. This one's, it didn't give you much of a flag action. It just kind of did a little pop and then broke right back down. So this one's harder to... Oh, that's not what I wanted. Yeah, I don't know what to think on that. Avago. Little adjustment here. We'll go right in here. See how it acts in that area. It really needs to defend at least here. Otherwise, it could have a pretty good drop there. Back into this area. Check it out on the weekly. Yeah, I wouldn't be shocked if the market keeps going down to see this thing back in the mid-upper 400s. Somewhere in here. Okay. Qualcomm, did I already do Qualcomm? No. Okay, so we're on the weekly. Qualcomm, they must have had earnings, and they must have beat, because they actually had an up week, which is surprising. Seeing how the market closed this week, like the overall market on the Qs and the SPY, they were both pretty scary. If you're long, anyways. I've really only been short for the last couple weeks. Actually, I should say for the last couple months. That thing at the top that says auto zoom, when I first looked at that, I thought it said auto zone. I was like, what's AutoZone got to do with this? Okay. Here, if we reapproached this volume shelf, I'd probably be looking to short it, which, of course, if I would have been really paying it. Actually, I shouldn't say that. I switched to interactive brokers, so I still use TD Ameritrade. I obviously Thinkorswim for my charting, but I execute through interactive brokers, and I have to wait until like the 3rd or 4th, so like this coming like Tuesday or Wednesday, before I can trade because my deposit has to clear. So I couldn't trade this week, really. Would have been nice though. That's a hell of a rip. Would have been a nice, clean little short entry. Rips up past the previous several candles. Monday goes lower, comes back into this area. Okay, Intel, how's Intel looking? Oh, like garbage, like always. Come right here to the lowest volume shelf on the weekly. Lowest volume bar here, or profile bar, I should say, will be an area of interest, which is pretty damn close to there. A number of these semiconductor stocks are close to areas where it wouldn't be completely illogical to see a bounce. I don't have a bullish longer term view of the market at the moment. Like longer term being, 6 months or better. Simply because all the Fed stuff. But I think, so there's a Fed meeting this coming week, and I think depending on how that goes, we'll either get a bounce or we'll travel hard and fast further down. So if Fed comes out real aggressive, I'm guessing we'll kind of fall off a cliff. If they are fairly chill, maybe we'll get a nice little bounce back up into some of these areas of, I don't see it going anywhere near all-time highs again anytime soon. But yeah. ADI needs a little adjustment. AMAT. Oof. Here, I guess. This one isn't very convincing. There's not really any good volume to base any of this off of on this one. Texas Instruments. Wow. They had a good earnings thing to sell too. Nice little earnings. Must have at least met. I don't picture that being too much of a beat, you know, because they did barely better than the last time. Okie dokie. That one's acting all right. So if we do get a bounce, could be pretty good. This is another name that's I don't know its weighting. Like how heavily ice semi is weighted to this name. Probably not very heavily, but it's in the top 12 because it's on my other monitor, and I just did them in order, and I have 12 charts, so it's in there somewhere. Alright, I'm just going to click through a few of these other charts on the daily. We'll start at that one we were just at, because this has already gone way longer than I thought it was going to. I'm going to need to pop this out. Detach gadget. Fuck. I don't know how much you'll be able to hear the music. I have the desktop audio like in the streaming software turned down quite a ways because I know YouTube will jip me if I don't. I think they mute the whole video. Nice box. This one's somewhat recent IPO, so. Ooh. F5 Networks. Did not beat on earnings. Wow. That's a pretty substantial gap down there. Yeah, I don't know. I'm not even going to put an area on that, of course. I follow these network and cybersecurity stocks, but I don't really execute on them. I just kind of like to keep tabs on them since I watch the Qs and like tech as a whole a lot. Alright. What's this one doing? This is a cheap stock I was watching for a while. Oof. They got slaughtered on earnings. God damn. It made these really nice flags. You can see I had plotted out. I was watching it pretty closely. I don't really play these ultra cheap stocks, but I was just really liking how the chart was forming. Like it formed this kind of cup here, and then it's on its way back up. But of course, the market's getting killed, so 80% of the stocks are going to get killed along with it. That one looks pretty strong. Lattice Semiconductor. It's kind of holding up. Bit of a bear flag going on. Oh, when's their earnings? 5-3. So that's this coming week. Okay. Something to remember. Juniper. Cisco. This one's kind of holding this gap that it had. Okay. Let's go back to the FANG stocks. I shouldn't say, I guess, go back to, but just go to. Man. I remember I thought about shorting this into its earnings, and it would have been like my biggest single gain ever, which is one of those things that's both frustrating, but I love about trading is that, like, a lot of times I have these thoughts of like, okay, I'm going to do this. Like when Bill Huang, however you say his name, blew up, I saw, I believe it was Viacom. He was in a couple names, but I think it was Viacom. I saw it, and it was up right about 100, and it kind of started to flag a little, and I was like, you know, if that doesn't make a new high, but approaches the high, I'm going to short it. And I didn't end up doing it. And had I, it would have been like 30 grand of a gain in just like a week, or maybe even less. And I always have those instances where I'll think something, but I won't act on it, and it ends up being fucking an amazing play. So the reason, yeah, obviously it's annoying, but the reason I find it like motivating and inspiring in a way too is that if you stay in the game, the probabilities are that at some point you're going to catch one of those or some of those. And it only takes a couple of those to make an insanely good year, you know, a crazy good year. So that's, you know, that I'm always on the hunt for those. Just one of these days I need to actually, you know, listen to my gut and execute it. FB, you know, I think I'm going to do the FANG ones maybe in a quick one tomorrow. This is already an hour, pretty much. I figured this was going to be like 20 minutes. So I'm just going to do the FANG ones tomorrow in a separate little upload. And hopefully that one will only be like 20 minutes.